makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, in for Francine Lacqua. Here's what's coming up on today's program. Civilian deaths escalating as conflict continues in the Middle East. Israeli Prime Minister Benjamin Netanyahu warning that retaliation has, quote, only started. This all comes as Hamas threatens to kill hostages. Macron and Scholz met in Hamburg as the EU says it's urgently reviewing assistance to the Palestinians after several member states protested an earlier announcement that aid would be suspended. We're live in Brussels. Plus, 10-year Treasury surging after dovish comments from Fed officials dim those rate hike bets. Geopolitical concerns fueling a flight to safety. Let's take a quick look at how the European markets are trading. Look, you are seeing a lot of green on the screen. A lot of this is defensively led. And I do mean defensively in terms of stocks. But look, you're also getting some headlines geopolitically and from the IMF as well. They're saying that they are warning of stubborn inflation, weak global growth in 2024. They're also talking about some of the moves in the actual growth rate pulling back just a little bit. That is going to be crucial as we talk about whether or not this is actually going to be the slowdown and the pace of the slowdown that we were expecting even just 7 days ago. Nevertheless, green on the screen right now. You are seeing outperformance right now in the French and German indexes. German index higher by 1.5%. But I think the key question that everybody is asking is what does monetary policy do now, especially in the case of a geopolitical tension. This is going to be crucial in terms of the Federal Reserve hike when you see the odds completely change. Look, back on Friday, the odds of a November rate hike was over 30%. Now down to 12. This is significant here simply because it brings about the question, if you start to see more upward pressure in commodities, does that then ultimately kind of have a ripple effect into the inflationary story and then ultimately the central banking answer to that? Or do central bankers basically play on the defensive and say, look, we're not actually going to be doing that? A lot of cross currents here. We're going to digest that in just a few moments with our markets guest. But for now, I want to tell you about the trade that has been outperforming, and not just today and not just yesterday, but in the last about year and a half. And a lot of this is going to be in the defense stocks. We're talking about geopolitical conflict right now. Naturally, you're going to see a lot of people kind of near a lot of the defense bids. And I don't mean defensive as in big tech stocks. I mean defensive as in aerospace and defense stocks. Specifically, the proximity matters here because you can see as the war in Ukraine broke out in March of 2022, this is a trade that has been outperforming, and this has a fundamental tailwind to it as well. The idea that you are now seeing defense budgets for a lot of European and American governments actually increase. So it's no wonder that some of these European stocks are going to outperform. That's a trade that could, by the way, unwind just given how much it has moved. Now, of course, we're going to go back to our top story of the day, of the week, and probably next few months. The escalation in the conflict between Israel and Hamas has entered a fourth day with at least 1,500 fatalities reported. The U.S. has said security assistance is on the way. President Biden due to speak later today. At least 11 Americans have died, with more understood to be held hostage. Joining us now with the latest is our Israel Bureau Chief, Ethan Bronner. Ethan, give us the latest. What kind of support could we expect from the United States?
Well, the Israelis are saying that because they had such a rapid, massive call-up in the last 2 or 3 days, 300,000 soldiers sent down to the border for this expected ground invasion, that their equipment was stretched. They also say that when they try to watch from the air to pick targets, that they don't have everything they need. So it looks like that kind of thing. I would guess also the Patriots, the Iron Dome, the anti-missile system, which has been stretched by all of the rockets that have come in from the south, and the fear that some may come in from the north from Hezbollah. That would be my guess.
Certainly a lot to digest as we kind of navigate the situation. In the meantime, Benjamin Netanyahu said that retaliation has only just started. What does that look like? Give us a timeline here of how long this could be expected to go for.
It's very hard to know. I mean, one of the things that has happened here since this very brutal attack on Saturday by Hamas is a kind of shift of Israeli paradigm, a sense that they felt completely surprised, shocked, and horrified, and that they are going to do everything they can to take out the Hamas infrastructure so that it can never occur again. They're talking in very dramatic terms. As I said, 300,000 men have been called reservists. It seems to me it'll go on for some months. And it seems to me that it's going to be quite horrible for the people on the ground.
Certainly something we don't wish on anyone, but we know this conflict is going to be lasting a while. Bloomberg's Israel Bureau Chief Ethan Bronner, we thank you for joining us and hope that you stay safe alongside your team and your family. Now, look, that's just one part of the equation. At the same time, you're seeing markets not just digest the geopolitical risk that Ethan just outlined, but also the monetary policy risk. And I think that's where I want to go next. Iain Stealey, JPMorgan Asset Management's international CIO for fixed income, joins me right here on set. Iain, pleasure to have you. Thank you for joining us this morning. Look, the geopolitical risk is one thing. Let's put that aside for a second. Let's talk a little bit about the bond volatility of the last 7 days before we even got the geopolitics of it all. You are now hearing a lot of Fed speakers come out and say, look, maybe that bond volatility did the job of a rate hike for it. Did it?
And it's not, I think the important thing is it's not just been the bond volatility of the last 7 days. It's really been the bond volatility of the last 3 months. Yeah. We've seen this huge repricing in long-end yields, whether you look at 10-year Treasuries, 30-year Treasuries. And I think importantly, we've taken out a huge amount of cuts that were priced into next year. So for the Fed officials who were thinking the market was getting ahead of itself, that they were going to effectively hike rates and then almost immediately start cutting, that's been pushed out. And it does feel that, listening to some of the speak yesterday, they're a lot more comfortable that the market is doing the Fed's job for them, and maybe they won't have to go quite as far.
But when are we going to see the repercussions of that? Because if you're looking at this pain on the long end of the curve, I think the consensus here is that's not going to show up in the housing market unless it stays that painful sustainably. Do we get there? Do we end up seeing kind of this long end have a ripple effect into the U.S. housing market?
Definitely, if we stay where we are, we're going to see that. And I would argue that we're already starting to see some of those lagged impacts feed through when you look at lending standards, when you look at credit card debt outstanding at obviously high levels. The housing market isn't really doing anything at the moment. It's pretty stagnating because who wants to get a mortgage at sort of north of 7%? Yeah. So it feels like this is coming through. Now, we likely to have a pretty decent Q3 from a growth standpoint, but we see a number of headwinds as we go into the fourth quarter. And I think that's what the Fed officials are looking at. Fourth quarter into next year, we've done an awful lot of tightening. Why don't we pause? Why don't we take a step back, breathe, and just see what the implications are?
So what's the trade here then? I mean, do you expect this volatility, especially on the long end, to continue? I mean, you're already seeing a complete turnaround off the Fed speak today.
We are, and I think what you've seen is, the market again got very excited that we were going to have to see more hikes, or at least higher for longer, and we're seeing a little bit of reversal of that. I think some of it's technically driven, but I think from take a step back and say, look at the movement we've had over the last few months or so. We're now at yield levels for bonds that we haven't seen since pre-financial crisis. If you look at a global government real yield index, we're basically at the average that we saw between 2003 and 2007. So for the people that were saying, financial crisis to pandemic was the new normal, maybe that's now the abnormal, but you go back even before the financial crisis and we're at those levels. So it does feel like long-term bonds are a lot more interesting. I obviously would say that as a fixed income person.
I think you're a little biased here.
But no, definitely it does feel like if you haven't owned bonds, if you've been underweight bonds for a while, you should be looking to get back into the market.
Okay, so if you're underweight bonds and you want to get back into the market, what is the trade then? Because I feel like maturities really matter here. What's the trade-off?
I think it's high quality fixed income, because when I look at some of the lower quality fixed income, I still think spreads are too tight. Yeah. And I think it's the intermediate part of the curve, because the big move will be what we call a bull steepening. So the front end of the market, we should see curves, renormalize. Yeah. And it's the front end, it's the belly of the curve that should do well in that environment. Long end bonds will obviously be your flight to quality bid. We saw that yesterday. Yeah. But as we go through the cycle, you'd expect it to be the 5-year part of the curve that should be the best performer.
I mean, Iain, one of the things we talked a lot about in terms of the bond volatility the last, I want to say 2 weeks or so, specifically when you saw the momentum really steepen, talk to us a little bit about the VAR shocks that perhaps some of these bond traders are going to be facing. What is the bond market not prepared for?
I think when you look forward, again, when we've got bank earnings coming out and we know what happened to the regional banking system back in March when we were looking at some of the unrealised losses they were sitting on, that's the concern. You've got people that are sitting on big unrealised bond losses. Are they going to be forced to sell into this? Is it going to exasperate the move, or has the move happened? So when we look at some of the positioning surveys, it does feel that things are cleaner than we were. Everyone was obviously on the bond bull market for a while earlier this year. It does feel a lot cleaner, but you still have to take into, as you said, there are still going to be hidden cracks in the system which are going to be impacted, and what are the knock-on effects? Ultimately, that's probably going to be knock-on effects that are negative for growth, which ultimately means in the long run you probably want to own bonds.
Yes. OK, so very quickly, you said the hidden cracks in the system. I usually associate that with what people say about the BOJ, that at some point the JGBs are going to completely break the entire market everywhere. That hasn't happened yet. 30 seconds. Do we still worry about the BOJ?
I think we have to worry about the BOJ. I think they are seeing a world where they're behind the curve and they should be normalising, but they're also going to normalise very slowly, because I think their understanding is that they could have a big impact on global markets. What will happen, though, is if they do start to normalise when the rest of the world is really slowing and going towards maybe central banks shifting policy towards easing, then it might not have as big an impact.
Makes a lot of sense. Iain Stealey, that's why we bring him on the show. So I pay him the big bucks. We thank you, as always, for your crucial insight. JPMorgan Asset Management's international CIO for fixed income. Coming up on the program, how is Europe reacting to the Israeli-Hamas conflict? We talk live to our correspondents on the ground as the EU performs a U-turn on aid for the Palestinians. This is Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. We are getting some breaking headlines here crossing the Bloomberg terminal right now. China weighing new stimulus, saying that their higher deficit will ultimately meet the growth target. Now, look, this is significant. You are seeing an immediate reaction in the dollar and the U.S. strengthening in the offshore yuan, 728 on that currency pair. The onshore not moving as much. Of course, that makes sense, but given it is the onshore. What's important to keep in mind is, again, this is having a ripple effect into the dollar, just given the weakness. Copper not moving a ton off of it. But the idea here is simply that they are weighing that new stimulus. We know that the PBOC has been very, very vocal in terms of making sure that their economy can actually stand pat, and doing it through different measures, not just through the rates, but through stabilizing the FX market as well. And looks like they are now exploring yet another way to stabilize that, in addition to some of the pain in the property market. We'll keep you apprised of all the headlines as we get them. We go from China to right back to Europe. EU foreign ministers are set to hold an emergency meeting later today. The EU saying it's urgently reviewing assistance to the Palestinians, dialing back on an earlier suspension. Let's get more from our European correspondent, Maria Tadeo in Brussels, all over this story. Maria, a U-turn from the European Commission on Palestinian aid. How did we get here?
Well, a U-turn, I would even say a double U-turn from the European Commission on this issue of funding to Palestine coming from the European Union. Yesterday, it was just chaotic communications from the Commission. It's such a sensitive issue. It's such a sensitive time. And as you say, the day started with a pledge from one commissioner suggesting that the entire development package to Palestine would be halted, that there would be new budget proposals would no longer be considered. That was watered down then by the Commission. At some point, you even had two commissioners publicly contradicting each other. Now, when you look at the situation in terms of where we stand now, what we know, as you say, is that the European Commission will carry out a review of the funding that it gives to Palestine. They say the goal of this review is to make sure that no European money whatsoever goes to fund or is misused for terrorism purposes. But they also indicate that no humanitarian aid would be cut off. Overall, this episode, what it shows really is, again, this very shambolic communications within the European Commission, but also it really shows not just a lack of coordination, but really a different level almost of sensitivity behind the scenes between the different countries of the EU when it comes to what to do with the Palestinian people at this point, and also highlights some of the fears from some officials that they really believe there is a looming and very serious humanitarian crisis that is about to play out.
Certainly something I'm sure you're going to keep a very close eye on. In addition to what else we can hear from the meeting today, what else is on the agenda?
Well, definitely coordination. And if you look at everything that happened yesterday, you could argue they seriously need some coordination, especially because up until now, we've seen the European Commission and the European member states and the individual countries obviously say very publicly that they stand with Israel, that obviously they condemn the events that took place on the Saturday. But as I say, there is a different degree of sensitivity in terms of what is the response when it comes to Palestine. The other issue on the agenda has to do with the hostage situation. We know that, unfortunately, we saw those pictures on the Saturday morning, really just terrifying, of people that have been kidnapped. The whereabouts are not clear. The exact number of people also not clear. But as you know, European countries have a duty to not just track down their citizens, but also find a way to bring them back safely home, if that is possible at this hour. So that will be debated, too, at this meeting that would take place today, as you say.
Certainly something I know you're going to be all over. Bloomberg's Maria Tadeo in Brussels, thank you for joining us with that update this morning. I want to stick with the European story and go over to Germany. German Chancellor Olaf Scholz and his French counterpart Emmanuel Macron are vowing to support Israel after Hamas launched its assault over the weekend. Bloomberg's Oliver Crook joins us now. Oliver, Scholz and Macron meeting again today. What are they focused on?
Yeah, as you say, Kriti, this was really a meeting that was scheduled outside of all of this, but this sort of took the headlines. And remember, France and both Germany have said that they have nationals that have been either killed or have been taken hostage in the events that happened in Israel. But really, this was a trip that was supposed to try to bring some of the tension down that exists between Macron and Scholz and some of the sort of friction that we've seen within the EU. So yesterday, they were at this Airbus factory. You see the pictures there, which is really a symbol of German and French kind of unity and cohesion on industrial policy, something that has been lacking, according to a lot of the sources that we speak to, on EV policy, on defense policy, on the economic vision, on nuclear energy. So really, this was an idea of having sort of a more informal meeting where they have cabinet-level talks and they have these conversations outside of sort of all of these intense pressures. So the cabinet is convening today. We'll get the fruits of that discussion in about an hour's time when Macron and Scholz both speak in a press conference in Hamburg.
And at the same time, there's reports that the EU is looking at Chinese subsidies, and this time in steel. What do we know about that?
That's right. So this is why it's so important to have unity within the kind of two major players within the EU, because you're tackling absolutely enormous economic and political struggles internationally. And so what we understand from the FT is that the EU is launching a probe into Chinese subsidies of its steel industry. Remember, we had that on EVs. And the difference now from our reporting as well is we understand that the United States is also sort of a part of this, a part of the discussion. And this is all about the discussion of friendshoring and bringing kind of a united front on economic policy versus China between the EU and the United States. And so the dates to watch are next week, October 20th. You have a summit in D.C. where we have the EU leaders, or EU leadership arriving there and meeting with officials in the U.S. We understand, to hammer out this proposal on China, but also to deal with another long simmering issue between the EU and the U.S. By the end of this month, if they do not have an agreement, we get the Trump tariffs kicking back in on steel and aluminum that Biden suspended 2 years ago. So this is another issue they're going to have to deal with in D.C. next week.
Yeah, things just got a lot more complicated for the commodities market. Bloomberg's Oliver Crook, thank you for that update for us from Berlin. I just want to recap some of the headlines we got earlier in the hour. This coming out of China kind of relates to what Oliver was just talking about there. They are now weighing new stimulus, a higher deficit expected to meet their growth target as well. Off the back of that headline, you did see some strength in the offshore yuan, which looks like has now been paired. I think the key word here is weighing that stimulus. We still don't know what that actually looks like. Regardless, we will keep you apprised of that as we know more. Plenty more to come this hour. Stick with us. This is Bloomberg. Conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Let's get a quick check on some of the other stories we're following for you around the world. Bloomberg has learned that EU merger watchdogs are set to order Illumina to sell cancer test provider Grail, undoing a $7 billion acquisition that had closed without EU permission. It would be the biggest escalation in a long-running legal fight over the deal, which was vetoed by the Commission last year over competition concerns. Over in the UK, the Financial Conduct Authority says OD Asset Management is closing its wealth business. This comes month after its founder, Crispin Odey, was accused of sexual misconduct. The embattled asset manager has been shutting funds as a part of a reorganization in the wake of the allegations against Odey. The 64-year-old, who was ousted from his former firm despite disputes, the allegations. Workers at GM's Canadian plants are on strike after wage talks failed. Unifor, the union representing more than 4,000 GM employees, is trying to get the automaker to match a deal signed with Ford that includes wage increases, cost of living allowances, and pension improvements. GM is already dealing with strikes in the U.S. by United Auto Workers. And shares in Samsung and SK Hynix are moving higher on news that the Biden administration will allow them to ship key U.S. chip-making gear into China to grow their plants in the country. The decision removes a key overhang for the chip makers and allows them to operate in the world's biggest chip market long term. SK Hynix warned last year that escalating U.S. restrictions may force it to close or sell its major plant in China. Coming up on the program, we're going to discuss the ongoing tensions in the Middle East and how global oil and energy markets are reacting, from natural gas to actual Brent crude. There's a lot to digest. Stick with us. This is Bloomberg. Civilian deaths escalate as conflict continues in the Middle East. Israeli Prime Minister Benjamin Netanyahu warning retaliation has, quote, only started. This comes as Hamas threatens to kill hostages. Macron and Scholz meeting in Hamburg. This as the EU says it's urgently reviewing assistance to the Palestinians after several member states protested an earlier announcement that aid would be suspended. Plus, 10-year treasuries surge after dovish comments from Fed officials dim those rate hike bets. Geopolitical concerns fuel a flight to safety. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. European natural gas has extended its rally as tensions rise in the Middle East. Meanwhile, crude oil dipping after posting the biggest jump in 6 months. Joining us for a look at the wider impact of the escalation in the Israel-Hamas conflict is Bloomberg Middle East and Africa anchor Yusuf Gamal El-Din, joining me right here on set. So we've talked about the geopolitics a little bit. Talk to me about this commodity reaction. Was the oil move yesterday an overreaction? Is the natural gas move today just on point?
I think what we're seeing in Brent and WTI is a pause for breath after you had the biggest move in about 6 months. You think to take away from some of the research notes that I've been looking through, like FG Consulting, for example, they're saying, look, this is something that is going to play into next year in terms of supply and demand. You're likely to see OPEC Plus hold the course into 2024 to keep prices where they're at. So they're forecasting $85.90, but not just now or in the end of Q3, Q4, but all the way into next year. And they're saying that OPEC Plus is going to have to do a lot more to keep it at that level. I'd also point out on the natural gas side of things, you had a physical outage, which is very different than the possibility of an outage in the crude oil story. Double-digit gains yesterday. Today, we're up again as much as 7.3%, which is the highest level since mid-June on some of those European gas contracts. So the Tamar gas field in Israel will shut down. Chevron said, hey, out of security concerns, we're going to have to temporarily suspend that. The thing is, this is one of the largest gas fields in the region. Israel wanted to be an energy exporter on the gas side of things, and now the Egyptians are raising the red flag, and they're saying we're seeing a drop of 20% in the gas that we get for our energy needs.
A lot to digest here. Yusuf, you're sticking with me. I want to bring in another expert. Cornelia Meyer, Chair and CEO of MRL, joins the program now as well. Cornelia, let's pick up on what Yusuf was just talking about, this massive move that we're seeing in the commodity space. He was talking about natural gas. I want to bring the conversation back to oil, because one of the bull cases for oil right now is that Iranian supply is just going to get cut tighter and tighter, more sanctions on the way. Your take about the likelihood of that case?
Well, I think what you've seen over the last 6 months or so is actually Iranian production come up to about 3 million barrels a day, with the U.S. not being quite as stringent on imposing the sanctions because of the war in the Ukraine and the sanctions on Russia. However, when you look at it, when you drill down, where is Iranian crude going? It's mainly going east to China. 80% is going to China, and it's mainly refined in those small refineries called the tin pots. and they have very little to no contact, financial contact with the US. So Iranian crude may not be quite as much affected as was feared, initially, and that's probably why you have seen the price of oil come down just a wee bit from yesterday.
Cornelia, you've seen quite a few of these clashes over the years, and the big debate around what is the energy risk premium that needs to be baked in to accommodate for the geopolitics. What do you think we're with that today? What dollar amount would you put on that?
Well, it's very hard to put a dollar amount on it. I think actually where you see a real geopolitical risk premium would be on gas, because we've substituted, especially in Europe, from the risk with Russia to a global risk. LNG strikes of LNG workers in Australia, or now the Tamar field being shut down. Oil, I think it's baked in right now, the geopolitical risk. But mind you, we then also have to look at fundamentals. You look at OPEC has upped its demand forecasts, as has the IEA. So demand is set to grow. And that given supply, that means prices are going to stay high for longer.
Is there a more direct read-through between the geopolitics of the Middle East right now, these various players kind of chiming in on who's right and who's wrong in the Israeli-Palestinian conflict, and then what OPEC Plus actually does? I mean, in theory, they should be two separate entities, but I think a lot of global investors will wonder if there is some sort of read-through.
Well, there may be some read-through in terms of, Saudi Arabia being the big gun in OPEC, and Russia being the big gun in OPEC Plus, in the plus part of OPEC Plus. And you have seen His Royal Highness Crown Prince Mohammed bin Salman come out and say, well, still, rooting for the Palestinian people. He did so to a certain degree in his big interview 2 weeks ago with Fox, where he said we may be nearing an agreement with Israel. However, let us not forget about the plight of the Palestinian people. So yes, there may be some read-through, but also a lot of it is also markets. And when you look at OPEC, they do make decisions based on analysis, and their analysis says growth may be there, but how sustainable is the growth of demand?
We've seen OPEC Plus quite enthusiastically take barrels out of the market to support the price. I'm wondering if we get an escalation on the ground even further to what we saw over the weekend and the tragedies that unfolded. If we get that kind of output, does that mean that OPEC Plus might be as willing to basically add barrels to the market to help bring down the price? What would be the red line in the sand, would you say, in terms of, helping out and doing a U-turn in OPEC Plus policy?
Well, I would say when you look at it, OPEC Plus really does look, when you see how they make decisions, they look at the demand-supply picture and make a non-biased sort of factual decision. Now, obviously, the current conflict doesn't help, and if you are the big OPEC guys who sit in GCC, it must worry you, because it's not just the Hamas Israel conflict or how Iran ties in. It is also, how does it affect Egypt? Egypt is a near neighbor to the GCC, and if they suddenly see a flood of refugees come in, that's going to be tough on top of an anyhow stretched economy.
What does that then do in terms of factoring in the United States here? You're already seeing a little bit of military interference here coming from the United States, a lot of defense support promised, potentially from the European Union leaders as well. Is there a macro take or an investment take here when you look at kind of military involvement in a way that we really didn't see when the war in Ukraine broke out?
Well, I think it's a very different thing for the U.S. The U.S. will side with Israel, and the U.S. has always sided with Israel. And the Europeans, especially Germany, will side with Israel. And for Europe also, the Ukraine is actually a wee bit closer than Israel. But yes, we see that siding. But then on the other hand, we also see the countries in the GCC or China maybe not, or certainly not agreeing with the U.S. European stance on this conflict.
Cornelia Meyer, CEO of Meyer Resources, we thank you so much for joining us. And of course, Yusuf Gamal El-Din, our Bloomberg Middle East and Africa anchor, as well, joining the program. I want to continue the conversation here. A close ally of the Israeli prime minister says Iran may have had forward knowledge of the Hamas attacks on southern Israel. Iran, on the other hand, has denied involvement, while the U.S. says it doesn't have direct evidence on the question. Bloomberg's Middle East breaking news editor Patrick Sykes joining us now. Patrick, walk us through both sides of the case. Is there any evidence that Iran may be behind this?
So it's widely accepted that Iran is supportive, is backing, is sponsoring, funding, in part, Hamas and other groups around the region like Hezbollah. But analysts are pointing to the fact that operational decisions are often separate. So it's yet to be proven that there's a direct link with the weekend operation. We did just, in the past 20, 30 minutes, get the first public comments from Iranian Supreme Leader Ali Khamenei. He was interestingly warning Israel against a large-scale attack on Gaza, what he called massacres and mass killing. He said that if that were to happen, that Israel would bring a greater calamity on itself. So I think the nature and the scale of that expected Israeli operation in Gaza is going to be key in deciding how other players in the region, like Iran, will react.
What might the reaction be, though? I mean, Patrick, you're kind of in closer to the region than we are here in London. What is the expectation, the worst case scenario of how this all plays out?
I mean, the worst case scenario would be sort of direct conflict between Iran and Israel, I think. But history would tell us it's more likely to occur via these proxies, via groups like Hamas, groups like Hezbollah, groups like Houthis in Yemen have been active in targeting shipping in the Gulf. So the risk is that it spills beyond that. But I think the baseline expectation would be that it's an escalation of the proxy war rather than a spillover into a hot war.
Certainly something we're going to be keeping our eye on. Patrick Sykes, all over that story for us. We thank you for joining the program from Istanbul. Coming up, the world's biggest crowdsourcing platform tells us why it sees the UK as a key market. We talked to the GoFundMe CEO, Tim Cadogan, live next. This is Bloomberg. The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Now, the UK tech environment has come under strain recently, but the crowdsourcing platform GoFundMe sees it as a key market. Revenue here doubled in the last 3 years. They recently passed the £1 billion mark for donations in the UK. Joining us now, Tim Cadogan, CEO of GoFundMe. I completely butchered the name. I tried. I gave it a real shot.
It was great. It was great.
We'll do it better on the way out. Tim, thank you for joining the program. Why? Why the UK when everyone else seems to think this is not the spot?
Well, we've been in the UK for 6 years. It's one of 19 markets. And in all the markets we are in, people want to help each other. And as awareness of helping each other through crowdfunding has grown, the UK market has grown significantly. As you mentioned, we just hit a cumulative £1 billion. And that comes from 23 million people donating to help others through our platform.
I mean, people can be very nice. There's also a price on that oftentimes. And I think a lot of people have found that price in this rising interest rate environment. Given this kind of pressure that a lot of people are feeling on their wallets, have you seen any changes in consumer patterns here?
We have seen some changes. So in the last couple of years, we've seen fundraisers with a component of cost of living increase about 10 times. And those can be for families with medical expenses that might be caring for someone at home, so have heat and electricity costs. Or it can be people struggling with pet bills. So we've seen a real pattern of
pet bills?
Pet bills. So vet costs have gone up.
Okay.
And so people are struggling to pay those. So they're asking for help to pay for their dog or cat's treatment.
So where then is your growth here when you're talking about, especially in this environment where people are maybe pulling back a little bit on the purse strings? Do you expand in the UK? Do you go abroad? What do you do?
Well, interestingly, the UK is growing as a market. Even one might think after COVID it might go down, but actually this year is probably on track to be our strongest market, and we're seeing that around the world. And so this need for people to help each other in whatever situation remains very, very strong.
So if you were to expand further beyond the UK, where would that be?
Well, currently we're in most of Europe, we're in all the English-speaking markets, so we're thinking, for example, about Latin America as a potential market that we may pursue, but we have yet to decide.
What's holding you back, out of curiosity?
We have still so much to do in our core markets to help people be more successful, and so it's a classic question of product prioritization. We have access to about 1 billion people in the markets that we already serve, and so doing a better job for them and helping more people use our platform is the top priority, and then extending beyond that.
Okay, well, I feel like you might have maybe a little more appetite to extend if you had a little bit more funding yourself. Talk to us a little bit about plans for an IPO. You're privately listed. Yes. Are you going to IPO anytime soon?
Well, actually, we are a profitable company. We have what we need to operate effectively. In terms of further options, our focus is on making our customers as successful as possible. If we keep doing that, that generates options for us as a company. We have no immediate plans beyond that.
Is that something you might consider in the long term?
I think all companies would like to consider that. I think we would consider that at the right time, but really it's a focus on the customer, helping people help each other, and becoming more successful as fundraisers and as donors. That's the focus.
All right, I'm going to try this one more time. You said about the IPO, you might be on the waiting game. What about things like debt issuance? Have you considered alternative ways to get even bigger?
We haven't needed to use any of those instruments. We run our company in a way in which we can invest what we need. So we are self-sufficient and haven't required any other access to the capital markets or the debt markets.
A lot of sunshine and rainbows over at GoFundMe, huh? Well, let's talk a little bit about perhaps some of the campaigns that come in the light of the chaos we've seen in this past weekend specifically. Are you seeing an appetite just in light of the Israel-Hamas conflict to help that part of the world more? Have you detected that?
For sure. So in the event of any conflict, and this was obviously the case with the Ukraine war as well, we see a big desire to help people affected. We've navigated those for a number of conflicts and wars, and we will continue to do so. It's really important to understand that we operate within a very tight set of national and international laws that allow what kind of help can be provided and what can't, and we run the platform and monitor that very closely, particularly in a situation like this, to make sure that we and our customers are safe and compliant with those laws.
Well, it is always good to have a platform that helps, specifically in conflict like this where funding is needed so immediately. Tim Cadogan, GoFundMe CEO, joining me right here on the program. We thank you so much. Coming up, we're going to stick with the UK. We're going to discuss Keir Starmer's crucial conference speech as the UK Labour leader promises to rebuild Britain after 13 years of Conservative rule. We are live in Liverpool next. This is Bloomberg.
I set out the fiscal rules that I would stick to with iron discipline, and I got support from the conference again in setting out those rules. We won't borrow to fund day-to-day spending. We'll bring debt down as the share of our economy, and then only subject to that, we will invest in the things that can boost our productivity, working in conjunction with business to unlock further private sector investment.
That was the UK Shadow Chancellor Rachel Reeves speaking to Bloomberg from Labour's annual conference in Liverpool. Our UK correspondent Lizzie Burden joins us now from right there at the conference as well. Lizzie, what more did we learn yesterday about how Labour would run the economy?
Well, Kriti, Labour are riding high on their 20-point national poll lead. They're sticking to the big picture, and in a sense, they can because Israel has been dominating the airwaves, and it's kind of spared Keir Starmer and his top team from getting into the details of what they would do if they were in government. And they kind of would want to be that way, given that an election could be 15 months ahead still. I was speaking to 3 shadow Treasury ministers yesterday, and none of them would tell me what month or how many months after a general election they would target having the fastest growth in the G7. This is their number one mission, and it's how they say that they'll fund public spending. I also asked the Shadow Chancellor Rachel Reeves, as you heard there, how she could be sure that the markets won't punish her for borrowing to invest when you've got yields high, when you've got debt 99% of GDP, and when we saw how the markets reacted to Liz Truss. But she channeled Margaret Thatcher and she promised caution. So despite the specifics, still, you've got it seems to be working. Rachel Reeves had her speech to the conference hall. It was absolutely packed out. You had to stand at the back if you wanted to watch her, and people were being turned away. And then you had the former Bank of England Governor Mark Carney endorsing Rachel Reeves. I should say that he is the new chair of Bloomberg LP, the parent company of Bloomberg News. But Kriti, I think what this really shows is that business is taking Labour seriously.
What else can we expect from Keir Starmer's speech specifically?
Well, he's going to be speaking later today, and this really is the key moment for Keir Starmer to tell his party and the nation why he should be Britain's next Prime Minister. We're expecting him to say that instead of this era of Conservative decline, he would bring a decade of renewal for Britain, a decade, so 2 terms. And indeed, we know that he's been telling his team to plan for 2 terms in government. You can expect him again to focus on the big picture, but perhaps we will get announcements on his house building targets. Contrast this to Rishi Sunak's approach in Manchester. Of course, he cancelled the northern leg of HS2, so you can expect him to draw that distinction. And the slogan of this conference is "Let's get Britain's future back." So that'll be the theme of Keir Starmer's speech later.
Certainly something we're going to be keeping a very close eye on. Lizzie Burden there at the UK Labour Party conference in Liverpool, keeping us apprised of everything we need to know in British politics. I want to bring us back to some headlines that we got as well. The IMF warning of stubborn inflation, weak global growth in 2024 as well. Look, this is not new. We've had the World Bank come out with similar projections. I believe they're actually bringing down the projections from about 3% to 2.9%. It's not a major move for markets, but what it is telling you is that there is that slowdown in the works. It just seems to be a long, painful, drawn-out slowdown, and that's going to be significant, especially as we're at the IMF meetings in Marrakesh, Morocco at the moment, just a couple weeks after the earthquake there as well. So talking about global development is, of course, top of the agenda, and specifically where China plays a role. We got headlines there as well earlier in the hour. They're now weighing new stimulus, now that a higher deficit could actually be meeting their growth target anyway. Now, the offshore yuan is where you saw the biggest currency move, the dollar yuan there, 728, we'll call it. And you did see a move to strengthen the offshore yuan. But again, we don't know what form this actually comes in. Is this a cut in rates? Is this a cut in loan growth? Is this a cut to actually help some of the property sector specifically? Or is this something as simple as consumer-oriented stimulus? We have no idea. And I think the operative word, as they are still thinking about it, is not official yet. We'll keep you apprised of all the headlines as we get them. For now, up next, Bloomberg Brief with Danny Berger in London, Manus Cranny in New York. Stick with us. This is Bloomberg.